So today we're talking about Intel, but I want you to forget the Intel you think you know. This isn't just another story about a legacy tech company. No, this is about a fallen champion, a giant that's been brought to its knees and is now facing, without a doubt, the most critical, high-stakes moment in its entire history.
And to really get a sense of just how big a deal this is, this one quote from the analysis we're looking at says it all. We are not talking about a few tweaks or a minor course correction here. This is a complete, top-to-bottom bet-the-company overhaul. It is absolutely massive.
And this slide just perfectly lays out the drama of the situation. It really paints a picture, doesn't it? On the left, you've got the Intel that ruled the world, dominant, protected by this massive competitive moat, and just printing money. And on the right, that's the Intel of today. A challenger, fighting for scraps. Its defenses are crumbling. It's actually losing money. The whole story here is about the journey from that left side back to the right.
So how in the world does a company like that even begin to turn things around? Well, they're going all in on a single massive bet. It's called IDM 2.0. And this isn't just some new corporate slogan, it's a wildly audacious plan to literally rebuild the fortress that once made them seem invincible.
Okay, so what is IDM 2.0 really? Well, for decades, Intel was a totally closed shop. They designed their chips and they built their chips, period. IDM 2.0 completely dynamites that entire model. The new plan is to become a world-class factory for hire, a foundry. This means they'll build chips not just for themselves, but for anyone who pays. And that could even mean their biggest rivals. It is a fundamental, risky, company-altering pivot. The plan basically boils down to 3 huge, and I mean huge, steps. First, they have to get back on top in manufacturing. Their roadmap for this is insane. 5 new generations of chip technology in just 4 years. It's breakneck speed. Second, they have to actually build this new foundry business, convince other companies to trust them with their designs. And third, if, and it's a big if, those first 2 steps work, they can finally get their expensive factories running at full capacity again and hopefully get back to making serious money.
So I know what you're thinking. That sounds, well, almost impossible, right? The ambition is just off the charts. But there is a really compelling bull case to be made. There are solid reasons to believe this incredible comeback story could actually happen. So let's look at the optimistic side.
Let's start with the cold, hard numbers. In a recent quarter, Intel reported adjusted earnings of 23 cents per share. Now, why does that matter? Because Wall Street analysts, the folks who do this for a living, were only expecting 2 cents. That's not just a beat, that's a blowout. It's a huge signal that the core business is getting healthier way faster than anyone thought possible.
And here's the thing, they are not doing this alone. Intel is getting a massive boost, nearly $6 billion from the US government's CHIPS Act. This is a game changer. It takes a huge amount of financial risk off the table for building these incredibly expensive factories, and it shows just how critical Intel is to national security.
But maybe the biggest vote of confidence, well, it comes from a place you'd least expect it. Their competitor, NVIDIA. There are reports that NVIDIA has prepaid $5 billion just to reserve a spot in line at Intel's future factories. Now think about that. Why would your rival give you that kind of money up front? Because they believe you can deliver. It's maybe the most powerful endorsement of this whole strategy. It's not just about the money, though. It's also about a massive culture change. There's a new CEO at the helm, and he has completely shaken up the executive ranks. The goal here is to smash the old, slow, bureaucratic culture that got them into this mess. They're poaching top talent from their biggest rivals, sending a clear message that the old way of doing things at Intel is over.
Okay, but for every single one of those optimistic points, there is a pretty scary counter-argument. We have to be honest about the other side of the coin. So now let's dive into the bear case, because the risks facing Intel are absolutely immense.
And this quote right here, it gets straight to the heart of the problem. That impenetrable fortress we talked about earlier, well, the walls have been breached. Years of fumbling, of dropping the ball on their manufacturing, the very thing that made them great, has left them incredibly vulnerable.
And you can see the damage. I mean, really see it. Right here. This is the server market, the crown jewels, where they make their best profits. Just a few years ago, Intel had nearly 100% of this market. Today, it's down to around 63%. This isn't just a minor setback. It's a catastrophic loss of territory in their most important stronghold.
And the attack is coming from 2 different directions at once. On one side, you have their old nemesis, AMD, who is just flat out executing better than them right now. And on the other side, there's a much bigger, more fundamental threat, the shift to a totally different chip architecture called ARM. Companies like Apple with their M-series chips and Amazon with Graviton are proving that you don't even need Intel's technology anymore.
And if you need any more proof of just how deep the problems run, look at this. This is a timeline of when two of the smartest, most respected investors on the planet, Warren Buffett and Seth Klarman, both tried to invest in Intel. And in both cases, after getting a look under the hood, they sold their entire positions and walked away. That is a massive red flag.
And when you actually crunch the numbers, you can see why they got out. If you measure Intel against the classic checklist that investors like Buffett use to find a high-quality, wonderful company, well, Intel fails on almost every single point. The financial picture has deteriorated that badly.
So we have the bull case, which says this could be one of the greatest corporate turnarounds ever, and we have the bear case, which says the risks are just too high. So where does that leave us? What's the final verdict? Is Intel actually a buy right now?
Okay, let's be absolutely crystal clear about one thing. If you buy Intel stock today, you are not buying a safe, stable, predictable company. What you're doing is making a speculative bet. It's a high-risk and maybe high-reward wager on whether this historic turnaround attempt will actually succeed. This kind of financial model really shows you just how wide the range of possible futures is. If you run a conservative scenario where the turnaround kind of fizzles out, the company's stock might only be worth around $28 a share. But in an optimistic world where they pull it off, the value could be as high as $72. I mean, that's a massive, massive difference.
So what is today's stock price actually telling us? Well, it suggests that the market is kind of hedging its bets. It's pricing in an outcome that's somewhere in the middle. Not a total disaster, but not a home run success either. Investors are betting that things will get better, but maybe not all the way back to the glory days.
Which really brings us to this final huge question. When you look at all the government money, all of the strategic importance, is a bet on Intel's comeback really just a bet on a single company? Or is it something much, much bigger? Is it actually a bet on the future of America's role as a technology leader on the world stage? Now that is the multi-billion-dollar question.